Welcome to the November 13th Advance Report for McGowan Group clients and NetWorthRadio.com listeners. I'm Spencer McGowan, your financial weatherman, with your weekly fast-paced tour of the global financial markets. I'm also president, McGowan Group Wealth Management. This week's fast-paced tour is called Getting Paid to Wait. And why is it that dividends and interest are so important? And we can see it when we look at the flat performance, flat and disappointing, of the equity markets the last 2 years. And we learned something in prior bear market cycles, and we go back to the tech wreck and the techniques for making sure that we come out of that with a good, reasonable rate of return. And it was all based in cash flow, which I'll get to. But I want to cover the 2-year results. This is important. It's why it's important to get paid to wait. One, you can pay the bills, and two, you can get compounded advantages from reinvestment. Look at this. This is the Dow 2-year. This is a total return, including the Dow's dividends, which are just 2%. It's a minus 2% net experience in the Dow for the last 2 years. Now let's look at bonds. This is the Vanguard total bond market, right? So if you were 50% basically blue chip index or the Dow and 50% Vanguard total bond market, well, with the Fed tightening cycle, the total bond market, even with the interest, minus 13.84, so minus 14% for the bond market. Wow, what a frustrating period for investors. And this is the real estate index, minus 26% for 2 years. We thought real estate was reliable, but you've got a commercial real estate crisis. It is a slow-moving crisis. Now, getting paid to wait, how would you get paid? In our model portfolios right now, we have global high-yield bond funds paying an average of about 10%. They're trading at 75 cents on the dollar. You could see the discounting when we looked at the total bond market index. Wow, I'm getting paid 10%. I can reinvest it, and if those bonds move closer to par, I have a nice gain. Energy infrastructure, rising medical dividends, those are also in the portfolio. When are we going to do real estate? I think that's going to be December of 2024, but I wouldn't say yet because of the refinancing crisis in the commercial property markets. Earnings growth. We had an 18 months earnings recession where earnings actually were down over that 18 months. Now they've started to grow again, but not by much. It's 3% earnings growth, 2.72%. with most of the S&P 500 companies reporting. Yardeni's, one of our best sources for what are earnings going to do from here, he forecasts a 20% increase in operating earnings for the S&P 500 companies by the end of 2025. I would argue that you don't want to miss the potential rally from that effect. And what about the economy? 2.1%. That is healthy economic growth. It's anemic, not too hot, not too cold, healthy economic growth, and that is an environment where companies begin to grow earnings in a reasonably good economy. Now, this is the dreaded government shutdown of 2018. Since this week, if the House doesn't pass a continuing resolution or their appropriations bills, they've been very busy and they haven't done it yet. So you get a government shutdown. The longest one was 35 days, and it happened in December of 18. You could make the case that that was related to the shutdown, this decline before. But what happened during the shutdown? Well, the Dow began to recover. You literally saw a 20% bear market from a Fed tightening cycle in 2018. Very familiar to what we're seeing right now. And by the end of that shutdown, which is right over here, you had recovered a big part of the 2018 decline during the government shutdown. Therefore, as an investor, it is probably not of long-term importance. Thank you for tuning in. Be sure to subscribe, and if you hit the like button, that'll make us happy too. But we will bring you each and every week the best reports on the market prepared by McGowan Group Wealth Management. That's a team of 10 dedicated to affluent families here in Dallas, and we are a fiduciary registered investment advisor. That means that we are obligated to do the right thing for your portfolio. You can go to networthradio.com and also set your time for a brainstorming session with the team that cares. Thank you for tuning in today to Net Worth Media. We also have Apple Podcast. Simply type in Net Worth Radio and boom, it'll hit your phone right then. If you also go to networthradio.com on a browser, you're going to be able to meet the team. You can see our performance track record, the model portfolios that go with today's broadcast. Also at networthradio.com, the Longer Play podcast is available there as well. We're grateful that you've tuned in. Remember, when we talk about a security, it doesn't make it a recommendation for your portfolio until we actually complete a written plan for you by Zoom or in office or simply a conference call. So you reach us at networthradio.com if you want to get that arranged. Market fluctuations and how to handle them. We build high cash flow portfolios, and past performance doesn't guarantee future results, so you do have to be ready for challenging markets. We can build more cash flow during challenging markets than we can when everybody's happy and everything's up, which is when we tend to raise tactical safety. Those allocation strategies are here at networthradio.com. Thank you for tuning in.